Hello everyone, investment scams rampant. Please vigilant and discerning. Do not trust information from unknown sources. Please make sure recognize 2 official Capital Securities community, Facebook, Capital Securities, YouTube, Capital Wealth Insights.
Hello everyone, I'm Don Jackson, Tony. Now let's get started with tonight's Kwon Good Night session. We have 2 topics for today, but before we get into them, I want to wish everyone a happy holiday. So, Lantern Festival, this might be our last, this is probably the happiest thing we'll say today. Let's take a look at the market. Actually, this morning, the performance of the Taiwan stock market wasn't great. As you can see, people started selling off, right? Because the effects and risks of war have already started, and if it spills over, well, so. Let's get straight to the point here. In this kind of challenging market environment, I'm going to try my absolute best to look for potential opportunities, specifically stocks that might be considered solid opportunities right now. Stocks that are more suitable for risk aversion, ones that have some advantages in this situation. Actually, it's not just about individual stocks, but rather sectors with strong fundamentals. Hopefully, this can help everyone. If you're looking for places to park your money, places where you can take shelter. Besides holding cash, these are some options you can consider. So first, let's take a look at the risk of war, and if that increases. As for Trump, he's still sending out some pretty strong signals. He said that he vows to do whatever it takes to do something, basically to strictly continue his offensive. Of course, this is a bit contradictory because the Secretary of Defense and also SS said on Monday that this isn't a never-ending war. But later, Trump emphasized that there isn't a fixed timetable. He didn't say he has to do something by a certain time. He just said that he's going to keep fighting indefinitely. Now, both of them did one thing. Neither ruled out the possibility of U.S. ground troops getting involved. So next, let's talk about the situation in terms of foreign affairs. There are a few points everyone should pay attention to. The first is, a lot of people are questioning whether the U.S. military might run out of ammunition now. So Trump said, that the U.S. military basically has an unlimited supply of ammunition. The technology's good, and just relying on their stockpiles, they could keep fighting the war forever and do it very successfully. Also, the supply level of advanced ammunition is pretty good, but there are even higher grade weapons stored in some allied countries, keeping them safe for us. Now, let me tell you, there are some hidden messages in all this. First of all, as for this so-called unlimited ammunition supply, if you've been following the Russia-Ukraine war, you'd know this might not be true. Why? Because if they really had enough ammunition, Ukraine wouldn't be struggling so much. In reality, their traditional ammunition just isn't sufficient. This includes things like artillery shells, 155mm howitzer shells, and bombs. So that's a problem. And then, when it comes to high-precision, advanced weapons like missiles, that's another issue. The supply is decent, but it hasn't met the expected standards. Also, some of their weapons are stored in neighboring countries, so there's that. A big issue right now is that the US is reportedly already reaching out to countries around the world to source supplies. For example, with the Patriot missiles, well, the ones in Europe now look like they're headed to Ukraine, so there's probably no chance to get those. And I've heard talk about coordinating with Japan, maybe even sending Japan's Patriots, and possibly with Israel as well. So when it comes to these high-end weapons, that's actually a problem to some extent. Even in Europe, the Russia-Ukraine war has pretty much depleted Europe's weapons stockpiles. So when they say they have unlimited supplies in this area, unlimited ammunition, so to speak, Everyone knows, sure, that's what they say, but how many people actually believe it? It's a very real issue. If you really follow some of the information about wars, then you know, like what people are worried about now, the US military's ammunition stockpile is actually limited. Second, let me add another point. Even if the US military's ammunition supply line is good, the real problem for the US military is logistics and resupply. So, why do I say that? Because Israel is a small country, right? So, it can't have a large, unless it's all kinds of weapons, but those are limited too. It's like if your house is too small, you can't have too much furniture, right? But no matter how much you have, there's always a limit. But if your house is, say, a big farmhouse, then you can fit a lot more furniture inside, right? That's the concept. If you think about it, you'll get it. Now, as for US military bases in the Middle East, sure, you can store ammunition there, that's true. But the problem is, first of all, if it's a base along the Persian Gulf Coast, sorry, but Iran can hit it. I don't think you'd keep too much ammo there, because if you knew a fight was coming, you'd move it out ahead of time. But if you move it farther away, how much storage space do you have? That's another issue. Second, of course, Iran also has some limitations. The question for Iran is whether its missiles can continue to be produced under wartime conditions, especially while being bombed. If Iran can keep producing missiles during a war, regardless of what kind of missiles they are, that's significant. Whether they're hypersonic or just regular, more ordinary missiles. As long as Iran can keep producing missiles, even if they're just average, run-of-the-mill ones, then basically Iran won't lose. So that's what we wanted to explain about the ammunition aspect. It's not as advantageous for the US as Trump claimed, and besides that, the so-called medium and high-grade ammunition stockpiles have never been as high or as good as they are now. That's basically all you need to know. Just take it in. What I just mentioned, you already know that. Ammunition is definitely an issue for the US. So actually, if they want to keep fighting, the key point I want to mention is something from yesterday. We talked about it starting with 4 days, then a week, and now it's up to 4 weeks. I can tell everyone that 4 weeks is basically the consensus among people who have a better understanding of war at these conferences. Everyone thinks that 4 weeks is a key concept. That's what I mentioned yesterday, going from a week to a month. Then in the short term, we're talking about 100 days, right? So actually, by the time it gets to 4 weeks, which is about a month, by the third or fourth week, you can pretty much tell what direction this war or conflict is heading in. At this point, we need to look for some clues. There's a significant risk here that this could turn into a long-term situation. We should all pay attention to this. It definitely won't be as one-sided as some people claim. Also, there's the risk of the conflict spilling over. When it comes to spillover, we can see Iran's involvement. In fact, today's news about this has caused quite a bit of turmoil in Asian stock markets. As for European stocks, things don't look too good today either. US stock futures are also down. The main reason is pretty straightforward. The biggest news is that the Strait of Hormuz has been closed. The Strait of Hormuz is very narrow at its tightest point. Honestly, you don't even need to lay mines. Just shelling it would be enough to block it. That's the situation right now. Yeah, traditionally, people have used mines, or sometimes they just sink ships right in the shipping lane. Either way, it works. There have also been some reports saying that Iran's navy has been sunk or something like that. But even if Iran's navy is sunk, but the thing is, when it comes to blocking the Strait of Hormuz, because it's so narrow, even without using the navy, they can still effectively enforce a blockade. So yeah. I mentioned this to everyone yesterday. Right now, as of yesterday, nobody dares to go through the Strait of Hormuz. Even if there's no official blockade, nobody actually dares to sail their ships through there. Why is that? Well, the ships up there are mostly cargo ships, and the thing is, insurance doesn't cover this. You have to understand, war and riots, these are things that commercial insurance absolutely will not cover. So yeah. Ship owners absolutely won't risk the potential loss of their vessels by taking this route. That's the first point. The second point is, of course, there are also crew members on board. Ship owners have a responsibility. If they really do take this route and someone ends up dying, the ship owner would also have to deal with the families of those crew members. Yeah, I really don't think any ship owner would want to do that. So since no one wants to take that risk, the crude oil supply situation has gotten pretty bad. Now, we know that aside from the Arabian Peninsula, besides the Persian Gulf side, on the other side is the Red Sea, which just happens to be controlled by the Houthi armed forces. So over there, it was already under blockade before, and now the blockade is going to be even more obvious. All we can say is it looks like the situation, yeah, it's really not as ideal as we hope. They definitely have the ability to keep this route blocked. The main reason they hadn't blocked it before was because the oil was coming out from the surrounding Arab countries. Then it was mainly exported to Asia, to customers here in Asia. China and Japan are the biggest ones. Since it was leased to China, Iran has always been reluctant to block the Arab countries, and there was no worry that they would do so. But now, since things have escalated to this point, honestly, it's not surprising if it gets blocked. Now, moving on. When we talk about the Strait of Hormuz, it's pretty straightforward. 30% of the world's reserved maritime trade volume passes through here, and 20% of LNG goes through this area. So, according to Ocean Network Express, around the Strait of Hormuz, there are about 750 ships backed up nearby, with 100 of them being container ships. So 10% of the world's container ships are affected. Don't underestimate that 10%. This alone throws the entire global container shipping schedule into chaos. And today, Taiwan's shipping stocks are really strong right now. Basically, in a sea of red, shipping is standing out as one of the stronger sectors. Of course, this is a direct reflection of the current situation. This situation is pretty bad, and what's even worse is that oil can't be transported out. This morning we saw a headline in the United Daily News. Actually, it was the front page headline of the Economic Daily News, and United Daily News had a similar report. So this is really... Later on, the Taiwan stock market was actually, in my opinion, affected by some social news, because Qatar's state-owned energy company was attacked by drones, so LNG production was halted. But once LNG production stops, that's a big problem. When there's no natural gas coming out, it's a serious issue. Qatar is actually Taiwan's largest source of LNG imports, so this is something you might be really worried about. In fact, if you look at it from the bigger issue right now is that given the current situation, you need to quickly secure the volume of LNG shipments coming from the Americas, especially the United States. This is really important. You have to make sure of this. You need to make sure the volume is sufficient because if it ends up affecting chip production, the impact on global stock markets would be pretty terrifying. Maybe I'm being a bit of a doomsayer here, but I just want to give a heads up. We really hope this doesn't happen. Of course, we hope that the natural gas. Hopefully, it's just a short disruption, just 3 or 4 days, and production can get back to normal. That would be the best case scenario. But you really need to stay alert and keep your guard up at all times. This is what we call an external risk, right? Like we just mentioned, if the fighting continues and the Hormuz Strait gets blocked, and then if Qatar's natural gas can't get out, and of course there's also some crude oil like we talked about yesterday, the maximum shutdown could last up to 25 days. The local oil companies there don't have enough storage capacity to keep all the oil they extract, so if they can't store it, they'll have to halt production. So that's the situation. That could get pretty troublesome, but on the other hand, this is also from United Daily News, and there's something pretty important here. Yeah, I think maybe not everyone noticed this because actually Trump, he didn't mention it. Trump officially sent a notice to Congress on Monday, March 1st. So it says there won't be any ground troops involved, and it's impossible to know the scope or how long it will last. So it's possible they're looking to declare war. Yeah, and this notification means there's going to be some kind of military action. So next, they'll probably move forward with a formal declaration of war. So you really need to pay close attention here. Actually, it was after I saw this news that I decided to make the first topic about the so-called spillover risks and opportunities of war. Because if the US Congress officially passes this bill, I think it would mean that the US might actually send ground troops to get involved. And if they really do send ground troops to participate, well, then opportunities will start to emerge. On the other hand, in principle, if this doesn't pass, it will automatically terminate after 60 days, but it can be extended for another 30 days, so that's 90 days in total. But what I want to tell everyone is, will it pass within 60 days? If you look at public opinion polls, if it were a nationwide vote, like a referendum, it probably wouldn't pass. But in the US, the US uses a representative system. Here, too, we have legislators, just like they're members of Congress, both in the House and the Senate. But because Israel in this, there's a very powerful pro-Israel Jewish lobbying group, so the chances of this bill passing in Congress aren't low, okay? Let's remind everyone the chances of getting enough votes to pass this bill aren't low. Once it passes, you have to be careful, because it's possible there will be ground stations. And if there are ground stations, it might end up dragging on for quite a while, because if there are ground stations, let's take a look. Yesterday, some American defense stocks immediately performed well. We want to tell everyone where the opportunity is. The opportunity is in defense stocks. It's not necessarily in energy stocks. Why? Because with energy stocks, oil prices in situations like this usually present more of a sharp reversal opportunity, not a trend. So when you're in that, going after the peak actually carries some risk, so you'll need to watch how things develop. We think that if you want to play it safe, you should focus on defense industry stocks, as they're more likely to present opportunities. For example, Lockheed Martin. Yesterday, it went up 2.83%. Moving on, we see that one of Lockheed Martin's star products is the F-35, along with the C-130. They're also still making the F-16. As for the F-15, that's already been transferred to Boeing for production. Boeing isn't listed here because it's mainly focused on the commercial sector. The proportion of commercial business is just too high. What we're focusing on here are defense stocks that are heavily weighted toward military applications. The key point is that Lockheed Martin has a significant presence in the missile sector with a wide range of missiles. Yeah, the Patriot missile system, Taiwan has it too. It's used for terminal interception, while THAD is for early stage interception. In theory, both the Patriot and THAD systems are ones that Israel would also use for comparison. At the basis, everyone uses the Patriot system. Then there's the HIMARS, which is an offensive rocket system, and the Hellfire missile, which is used to destroy tanks. Besides these, in addition to fixed-wing aircraft, they also have Black Hawk helicopters, the Aegis combat system, GPS technology, and the Trident nuclear missiles. So, roughly speaking, that's the lineup. The chances of actually using nuclear missiles are pretty low, but from the perspective of missile systems, Lockheed Martin looks like it stands to benefit quite a bit. And then, in addition, yesterday the biggest gainer was Northrop Grumman. So what are their flagship products? The B-2 and B-1 bombers. They also have the B-21 bomber and the RQ-4 drone. As for the RQ and MQ series, part of the MQ line is actually made by Boeing, but the RQ-4 is an early warning aircraft, and the E-2D is also an early warning aircraft. The RQ is actually a drone, and it's essential. It's a large one. Both of these, along with the E-2D, play a very important role in battlefield management and airborne early warning. In addition, Northrop Grumman also manufactures missile sentinels, the THAAD missile system, as well as air defense systems. They also produce radar and night vision equipment and network communication systems. So Northrop Grumman actually had the biggest gain yesterday. General Dynamics also went up. The increase yesterday was 2.16%. Now, it might not look as impressive as the others. The trend isn't as strong because General Dynamics is relatively What's important is that it has the M1 tank, the Stryker armored vehicle, and the LAV armored vehicle. Also, the main thing we talk about on the Ukraine battlefield is the 155mm howitzer. This is American-made. In the US, these are produced by General Dynamics. In addition, they also make nuclear-powered submarines and Arleigh Burke-class destroyers, as well as ID communication and mission systems. What I want to point out here is that if there are ground stations, General Dynamics is likely to benefit the most. Why? Because with ground stations, there will be ground-based ammunition and so-called a demand for vehicles. So it looks like there could be new orders coming in here for General Dynamics as well. On another note, Raytheon went up 4.71% yesterday, which is also a pretty significant increase. Alright, so its main focus is actually on avionics, including aircraft avionics systems, interior installations, and airframe structures. But most importantly, it manufactures aircraft engines. The F-35 engine is actually made by them. They used to be involved in the civilian sector as well, but now they're mainly focused on the F-35 engine. Also, Raytheon is known for making missiles, like the Sidewinder missile and AMRAAM, which is a long-range missile, and then there's also the Tomahawk cruise missile, as well as missile defense systems, radars, and sensors. These are also important to note. These are areas that are likely to benefit. And then, there's another company, right after Raytheon, there's Huntington Ingalls and Ingalls. They're manufacturers of nuclear-powered aircraft carriers and nuclear-powered submarines. At first glance, you might think this has little to do with direct combat, and the connection seems pretty indirect. But the key point here is, whether it's nuclear-powered aircraft carriers or nuclear-powered submarines, or even Arleigh Burke-class ships, these ships, especially the U.S. nuclear-powered aircraft carriers, for example, when one of them, the USS Abraham Lincoln, is deployed in the southern part of the Arabian Sea near the Persian Gulf. It was originally scheduled to go in for a major overhaul at the end of March, so there's already a maintenance order lined up for it. We need to specifically mention this. Besides these kinds of US military drills, which are actually pretty intense and really tough on the ships, the wear and tear and maintenance demands are extremely high. So what they really profit from is the maintenance work that comes afterward. I just want to point out that if there are several levels of maintenance, there's still more maintenance to come later on. That's called scheduling, and it needs to be adjusted, which means extra charges. So there's a chance they might make a profit from this. Now, moving on to the last one, yesterday's price jump was surprisingly big. This one might be less familiar to everyone. It's called L3Harris, or L3Harris Technologies. So what kind of company is this? They make battlefield communication systems. So what I want to say here is that this is basically a battlefield management system. So in the same way, during air combat or bombing runs, the demand for this might not be that high yet. There is some demand, but it's not that significant. But once ground troops move in, the need for battlefield management systems becomes huge. We need to make this clear to everyone. So there are a few sectors here that are likely to benefit under the risk of war, and that's probably true. Let's start by talking about the defense industry. Tomorrow, depending on the situation, we can see if we should introduce some energy stocks to everyone. And then there's also, let's talk about this. At the time I checked, which was just before 5 o'clock, Brent crude oil was still around $80, about $81. But after that, why is this not good? The price of crude oil jumped up to the $84 to $85 range. It even broke Monday's new high online. What does that mean? It means the situation is getting worse. It means that when Europeans wake up and see that the Strait of Hormuz is blocked, oil prices shoot up. So, if the Strait of Hormuz is blocked, I think Europeans are about to lose it. But let's take a look here, though surprisingly, as we'll see in a moment. When I took this screenshot, it was just before 5 o'clock, and gold had only dipped slightly. But as we'll see in a moment, the drop in gold prices actually became quite significant, and silver fell even more. Yeah, that's pretty intense. Let me explain why the US dollar has become so strong right now. Today, the dollar made a big comeback, and when the dollar is too strong, it puts pressure on gold's performance. Okay, so the 2-year yield is up here, and the 10-year treasury also rebounded. What you need to know here is that the main reason US Treasuries might be under more pressure this time is, first of all, it's because inflation is heating up more than before. And this kind of expectation is definitely there. First, as we mentioned yesterday, the PPI numbers were relatively high. Second, if you look, you'll see oil prices started rising at first. Americans immediately react to that, thinking prices are about to move. All right, let's take a look here. The 10-year and 2-year bonds do look like this. That's right. And another thing is, if it really comes down to ground warfare, well, the US military spending and the fiscal deficit might just be heading even higher. This actually puts a lot of pressure on issuing bonds, so the attractiveness of bonds as a must-have investment is disappearing, and bond yields are rebounding, and they're rising pretty quickly too. So, yeah. Now, let's move on to the second topic. Looking at today's expectations, things aren't looking too good, but we do see a sector with relatively strong demand, which is electricity consumption. The power sector seems to have a better chance right now of serving as a safe haven. So why is that? First of all, in 2024, global electricity consumption is about 1,100 terawatt hours, which is roughly double the 10-year average. The main reasons are extreme weather, increased industrial energy use, and the electrification of transportation. The electrification of transportation, like electric vehicles, is a big factor, and another major reason is the expansion of data centers. So when we look at the situation, the demand is really strong, but the problem is, as we can see in the chart on the right, the yellow part there basically shows you that nuclear energy only accounts for about 10% of the energy supply, which is obviously quite low. I think this will increase in the future, especially since demand is so strong. Let's talk about the demand we're seeing right now. So, electricity is going to become more and more valuable. Why is that? Well, industrial use, electric vehicles, air conditioning, and data centers all require electricity. And here you can also see the overall data usage machines. The electricity consumption of pharmaceutical centers is 12 times higher, 4 times the overall electricity demand. Actually, especially from 2017 to 2024, this is something to note. There were still very few data centers before, but the real surge in direct large-scale investment in data centers is actually happening this year and last year. That's when a lot more are being established, so this is just getting started. The demand for electricity from data centers is going to be huge, and the real pressure will come later on. Data centers are like electricity-eating monsters, so there will be a need for a massive increase in power supply. Especially here, this is something everyone has an idea about. Actually, what we see here is another piece of evidence, another sign. The electricity used by data centers is expected to more than triple. That's equivalent to adding the electricity consumption of an entire state of California. And don't think California's electricity usage is small. California is one of the largest states in the US. It's a very large state, and in terms of GDP, it's huge, probably the 6th or 8th largest economy in the world, so you need to pay attention to just how big this increase is. The demand for electricity here is actually pretty staggering. So, in addition to what we just discussed, there's an even bigger pressure, right? It's Trump making this demand, correct? In the future, these data center operators will have to provide their own power sources, and this is coming from the White House. The spokesperson also confirmed this, and then, so here, I want to tell everyone that of course we're seeing this demand, and the operators are definitely getting ready. Now, looking at the first solution, well, electric actually means 3 types of electricity. The first is nuclear power, and then in the US, the first method for nuclear power is to restart old nuclear power plants and conduct studies on them. This is the top choice. Why? Because it's especially fast. For example, the 3 Mile Island nuclear power plant is set to be restarted. But I have to tell you, in the past, there was the potential for nuclear safety incidents there. Still, now they're planning to restart it. They will bring it back up to current safety standards. The partner for this is CEG, Constellation Energy. Also, there's another nuclear power plant in Pennsylvania that's being considered for study. The partner for that one is another energy company, Talon Energy, Taln. This study will continue until 2042. So actually, what we can see is that for most people, the fastest way is to restart. But really, the quickest method is to extend the operation, and then after that comes restarting, and then there's also this other option. There's a power plant in Iowa that's going to be restarted, and Google is partnering with NextEra. This project doesn't have a name yet, but we'll see it in a moment, so everyone can take a look. Also in Illinois, Facebook is planning to purchase power from the Clinton nuclear plant as well. All right, and this is a power purchase agreement, and starting in 2027, they'll be taking over this power plant. In other words, it will be separated from the grid and operate independently. This isn't something we were particularly focused on before. Previously, around the middle of last year, our investment advisory group also held seminars and talked about the nuclear power segment. At that time, the main focus was actually on this SMR technology, which the market was pretty excited about. It's a new design for a small modular nuclear reactor. So when Zhua Kui talked about this new energy technology, everyone was referring to this area. So here's an example. Google is partnering with Kairos Power, but this company hasn't gone public yet. Looking ahead, by 2035, they plan to deploy 500 million watts, so 500 megawatts, and build 6 to 7 reactors of the 5th generation. The collaboration will go online starting in 2030. Amazon has also invested $500 million in S-Energy. This company also hasn't gone public yet. They're planning to build 2 SMR projects, one in Washington State and one in Virginia. So that's basically the plan. Besides that, there's also NuScale, which is the leading company in the US for small modular reactors. Basically, the front runner in small modular reactor technology. They were the first to be approved, and they've just reached a new agreement with the Tennessee Valley Authority to deploy their technology. And just to mention, there are also some others, like VST and PEG. There's also ENT, Oklo, GV, and AN. We'll talk about something important in a moment that you'll see soon. Nuclear power looks pretty good, but the issue is that restarting or developing nuclear power is more in line with what the Research Council recommends. Now, the second option is coal power. Recently, there have been very few investments in building new coal-fired power plants. Why is that? It's mainly because of environmental protection concerns, not to mention the ESG requirements. When it comes to environmental regulations, I honestly don't think there's anywhere now where coal power could get approved. So coal power is under pressure. This is true in Taiwan, in the US, and also in mainland China. This is mainly because of air pollution concerns. So the most common action now is to halt or shut down coal plants. For example, there's the Campbell plant in Michigan, South Oak Creek, and in Indiana as well. The Jeffrey coal-fired power units, for example, have all been postponed. Now, while coal power is being delayed, the most likely alternative is natural gas. This means switching to natural gas power plants, which is what mainland China refers to as coal-to-gas conversion. Now, let's talk about nuclear energy. It seems like a great option, but why is it still just being discussed and not widely adopted? Extending the service life or postponing decommissioning. Or restarting is actually a more practical and feasible solution in real-world applications. The main reason is that building new nuclear power plants takes a long time, about 5 to 10 years. Realistically, when you see 5 to 10 years, you should expect it to be closer to 10. Why is that? Nuclear power has strict safety requirements, and these requirements are quite high. So taking 5 to 10 years to build is necessary because, for example, the concrete walls need to be thick enough. The main structure has to meet those standards. Small modular reactors are indeed smaller in size, but their operating principles are still the same. So is it still fissile? In this situation, well, nuclear fission is basically kind of like the concept of a nuclear bomb, so you have to make sure it's controlled. That's why the safety requirements are higher. Because of this, natural gas plants can be built much faster, about 18 to 24 months, usually around 24 months to complete. So it's possible that you could really finish it a bit quicker. If you phase out coal power first and then start building the gas plants, then you might be able to make the transition more smoothly. Also, when it comes to coal power, the investment required from companies is relatively lower. Plus, in the US, because of shale oil, the cost of coal gas is also lower. It's actually cheaper than in other places, so this approach is more suitable for the US. Now, the share of natural gas is about 40 to 43%, and as you can see here, it's expected to keep growing. But if we look at the estimates from the US CIA, in 2024, it's 43%, then in 2025, it stays at 42%, and in 2026, it's also 42%. By 2027, it's about 39%. So here we can see that this share is actually relatively stable. Facebook is also planning to deploy natural gas turbines in this project in Louisiana, and Microsoft is going to invest in natural gas generators in Wisconsin as well. So there is demand in this area. It's actually better than everyone expected. Now, when we talk about this investment, it's actually more concrete and committed than anyone imagined. Why is that? Let me add something that's not on here. Japan and the US signed a trade agreement, right? It says Japan will invest $550 billion in the US. In this case, Japan made it clear that they're going to invest in power plants. For example, you can see here that some American companies have the capability, but Japanese companies like Hitachi or some companies within the 5 major trading houses, they have the management ability to independently build these plants. So the difficulty isn't as high, the construction speed's faster, and the approval process is smoother than in the US. The cost of obtaining natural gas is also cheaper. So here you have to see that, in my opinion, this is a more practical approach. Although nuclear power looks good on paper and is cleaner than natural gas, since natural gas just burns more cleanly, but you still have to burn it. Nuclear power, relatively speaking, is less of a burden. However, the problem is the construction time for this is just too long. So if you want to meet the huge demand that AI data centers might have in the next 18 to 28 months or so, natural gas seems to be a more ideal solution. Here we can see a few options. For natural gas utilities, it's basically N11. Given our time constraints, let's just list the names for now, and tomorrow we'll look at their performance. If there's a chance, we'll try to provide everyone with better information. Of course, whether that's necessary depends on whether the market changes significantly, right? Because on one hand, there are wars and conflicts, so the demand over there could end up being quite high. Now, let's take a look. As for utility stocks, we're talking about those listed in the S&P utility sector in the US. This group has been really cold, basically ignored for years. No one really paid attention to them. It's like they've been out in the cold for a decade. But suddenly, they turned things around overnight. Among them, NextEra is one of the more well-known names. Duke Energy, Southern Company, these are a couple of the bigger power companies. And then, aside from those, equipment manufacturers and brands. This part is worth paying attention to. GE Vernova, which was spun off from GE, is notable. Now, GE itself is mainly focused on aviation stocks, making commercial aircraft engines. Its power generation division has already been separated and is now called GE Vernova. Their main business is gas turbine equipment. That is, the kind that burns fuel and spins to generate power. Basically, it works by spinning and then driving, I think. Still the traditional method of boiling water, so it generates heat, which is then converted to electricity. This is the kind of equipment they have in that division. But when it comes to generators, Cummins is very interested in this area. They originally made diesel engines, but now they're talking about getting into this sector as well. This is something worth paying attention to in the US stock market. The response to this has been pretty good before. Also, there are energy sector stocks to consider. Basically, someone builds the infrastructure, and once it's built, someone has to supply the gas. There are 2 companies that handle gas extraction, and then below them are the companies that make the pipelines, the ones that manufacture gas pipes and so on. The first 2 are Scenery Energy and EQD. Of course, there are others as well, and you might have some additions. There are actually quite a few companies in this space. Then, when it comes to pipeline companies, there's Morgan. For pipelines, there's Venus and WMB. These two are pipeline companies, so you can see that there are actually opportunities in all these areas. And in addition to that, let me add a bit more about natural gas. Also, because of shale oil, specifically the Permian Basin, which is in Texas, you'll notice that these two companies are basically Texas-based. It's Pacific Land. This company is basically the landlord of the Permian Basin. So if you want to drill there, you pretty much have to go through them. There have been some bribery cases, and recently there's been some movement. Then there's Diamondback Energy. This company is also heavily involved in oil and gas, especially since they do a lot of shale oil extraction. In recent years, through consolidation, traditional oil companies have also gotten involved in shale oil. Among the more well-known ones with a higher share are Mobil and, if I remember correctly, Chevron. I think they acquired Hess, or rather, they made a major acquisition of a big Permian Basin oil and gas producer, so now they have plenty of oil and gas resources. Also, Chevron, CVX, is active in this area as well. Now, there's something else I want to share with everyone. Caterpillar, for example, used to make generator sets, so they're really strong in this area. There's also another company called Quanta Services, which is a bit unique. Caterpillar's mainly focused on machinery. But the thing is, when it comes to building power plants in the US, especially the civil engineering part, that's basically handled by this company, Quanta Services. So they pretty much have a monopoly in this area. That's why their business is doing really well. Here, I'm just giving everyone a bit of an idea. If we get the chance, we'll share some trend charts for your reference. Now, why am I bringing this up? It's because if there really is a comparison, because when there are wars or unexpected risks, sectors with more rigid demand like this one are relatively more protected. They can even be more resilient than other sectors and might even go up in value. This is just something for everyone to keep in mind. Next, let's take a look at some economic data. Let's talk about Monday's fun data first. Of course, today is Tuesday, and on the night of March 3rd, there aren't really any important numbers, so let's just take a look. The main thing is to look at the numbers from Monday. There weren't any major earnings reports released yesterday either, so the main earnings we're focusing on is Avago's report, which will be announced Wednesday morning. Now, let's look at something more important. The US ISM Manufacturing Index is trending downward, although it's better than expected at 52.6 versus 52.4. Its underlying structure isn't good. Why is that? Its new orders index jumped up to 70.5, which is a big increase. This means prices are rising. On the other hand, new orders dropped from the previous value of 57.1 down to 55.8. It needs to be higher than the preview value, but the problem is the economy should be declining. And what about employment? Well, overall, it's still okay at 48.8, but it's still not reaching 50. So here, I want to tell everyone that this number, the price paid, is what's supporting it. One reason the manufacturing index is higher than expected is because of this. But the issue is that this is interpreted as higher costs, which isn't exactly a positive interpretation. There's also another point. This number is this is before the U.S. has attacked Iran. This survey was done before any conflict with Iran, so you can expect that the price paid might rise even more noticeably in the future. So this is actually a negative factor. And in addition to that, regarding the Israel-Iran conflict, that's another aspect of this part. The transportation of crude oil has come to a standstill, so crude oil prices have been pushed up. People also believe that this conflict could weaken the recovery that's been happening in U.S. manufacturing, so this is actually a pretty bad situation. And in addition to that, further in-depth economic research and analysis have pointed out that what's even worse than expected is tariffs. Tariffs and rising metal prices are intensifying cost pressures. Okay, so there's an expected ripple effect here, so this is relatively... it's not looking good. Here, it's mainly the rising prices of steel and aluminum, because they looked at the survey results and saw that respondents were reporting that the prices of steel and aluminum are going up, which is forcing them to raise their own prices as well. Don't underestimate the impact of rising steel and aluminum prices. In other words, any metal products could see price increases. For example, if you're building a house, things like your door handles and if they're made of copper, even your faucets could get more expensive. I won't go into detail about all these items, but in the construction industry, your costs are just gonna go up. And what about cars? If your car doors are imported from the US, Canada, or Mexico, for example, import and production costs are also rising. Now the median US new car price tops $50,000. 20 years ago, you could get a new car for about $30,000, but those days are long gone. If you think about it, that's a lot of pressure. Wow, over 20 years. That's pretty scary. All right, next, let's take a look at some news from the Federal Reserve. So Kevin watched and the Times in the UK reported on this. We haven't seen this yet on Boom Boomer. Even though it's mentioned in the book, the source is actually the Financial Times. Kevin Watch said that before adjusting the balance sheet, they'll talk to the banking industry and the public. In other words, this is actually a more dovish signal. They're letting us know we don't need to worry about them taking the same kind of hawkish actions as before. And he's also willing to communicate. Honestly, I think being willing to communicate probably means they're getting ready to find a way out. And then Yellen also talked about this, about the impact of the war. And then there's another point. She mentioned that there are only 8 months left until the midterm elections. Trump, this time, is caught up in this war, and there's concern that it will make people unhappy about rising prices. The main thing is, whenever gas prices go up, Americans react with public outrage really quickly because with other consumer goods, people can make choices, but when it comes to gas prices, well, it just is what it is. Americans are a people who, after the Industrial Revolution, rely on their cars. Without a car, you basically can't get around. And without gasoline, gasoline is an everyday necessity, so this is a really big issue. Also, regarding Iran, things might still keep developing, so we probably won't go into detail or read out the news about it. The main thing is we want to focus on what's happening here. Regarding the stock market and the economy, Musk might have to pay back $17.5 billion because he's working on a merger. It looks like after integrating Psy and SmaxX, there will probably be an IPO. Also, Morgan Stanley has issued another warning saying that the US economy is facing some impacts, so that's something we still need to pay attention to. And then the US Court of Appeals has rejected stricter regulations. This is about a lawsuit to delay the implementation of a Supreme Court ruling, that application. So they wanted to postpone it, but it looks like here they're saying, no, you probably still have to proceed as usual, whether it's refunding tariffs or whatever. So Trump really does have some serious issues. And then, moving on. In other news, the freight rates for supertankers on the Middle East to China route have soared. For example, the daily rate for a ship that can carry 2 million barrels of crude oil has reached $424,000. This is a new record high. And then, moving on. Trump did not say he would use the Strategic Petroleum Reserve to influence oil prices. The reason people are asking is because Biden had done that before. And also, just take a look at the H-200. And another thing, the cloud service was so popular that it was temporarily interrupted. And then, in China, it was reported that the US did not notify China in advance before attacking Iran, which probably made China a bit unhappy. Also, Jamie Dimon, the CEO of JP Morgan Chase, once again issued a warning saying that people might be too optimistic about the risks. Then, Monkey Watch reported a piece of news saying that the Iran conflict is unlikely to harm the US economy or push up inflation, but the Federal Reserve is not in a hurry to cut interest rates. As for this, I think it's probably only true in the short term. If the conflict really drags on for a long time, things could change. This would put more pressure on inflation if it drags on. Then, the Russian central bank has sued the EU, because they froze their assets. And the US and China are having some negotiations, which means there will be a meeting in mid-March to prepare for a leaders' summit between the two countries. But I want to tell everyone, there are still a lot of uncertainties here. Why? Because right now the US and Iran are engaged in military actions, and I don't think China's too happy about this. It's kind of weird to be negotiating with you on one hand while you're fighting and causing trouble on the other. Another thing is, China is probably also going to question America's sincerity. After all, while the US was still in the middle of talks with Iran, before people had even left, they started launching attacks. I think this is a pretty bad part of the situation, just sharing that with everyone. Also, China has called for keeping the Red Sea shipping lanes open, and the Reserve Bank of Australia has issued a warning that at the meeting in 2 weeks, there might be another interest rate hike. So let's quickly take a look at the market situation. First, the S&P had a slight gain yesterday, while the equal weight index dipped a bit. But once you see the performance of the futures before the market opens, you'll have a better idea what's going on. Yeah, yesterday was just a small uptick, but it closed with a long bullish candlestick. Still, no matter how big that candlestick is, it doesn't really help because there's a 20-day moving average acting as resistance right above, so that's a pretty strong barrier. Then the Magnificent 7 index left a wick, which looks promising, but again, the 20-day moving average is right there as resistance too. Alright, so today we'll quickly look at the indexes first. If anyone has questions, let me know. We'll take a look at individual stocks in a bit. Actually, we really need to pay special attention to NVIDIA. NVIDIA is showing some defense at the 200-day moving average. After we look at NVIDIA, we also need to check out Micron and Broadcom for everyone. These are the two stocks I think we should pay more attention to today. So for Micron on Monday, it had a slight increase of 0.07. The main thing I want to point out is that today it's basically moving sideways. So Monday was a sideways movement, but I want to point something out. Today, Taiwan's memory chip stocks didn't do well. Don't underestimate this. Even though Micron is focused on HBM memory and Taiwan's memory chips are more traditional and somewhat behind, you shouldn't assume that only US stocks lead Taiwan's market. Sometimes Taiwan's market actually leads the US market. So if Micron starts to decline here at this level, you need to be careful. The correction pressure could be pretty significant. After all, it's a stock that's already gone up a lot, so everyone needs to pay attention to this. Another one, NVIDIA, has also been relatively weak lately. Even though its candlestick chart doesn't show a big drop and the decline doesn't look huge, if you keep watching, the drop is actually not that small. Why? Because it had risen too much and reached a very high level, so you don't really feel the volatility, but it's actually pretty significant. Now, let's also talk about Broadcom. On Monday, it dropped by 0.23%. The key point is, as I mentioned yesterday, it's barely holding above the 200-day moving average. Today, it dipped slightly. Yes, there are two red candlesticks, that's true. But the question is, on the third day, will it climb back above? If it doesn't get back above, honestly, that's not a good sign at all. Also, keep in mind that their earnings report will be released after the market closes on Thursday, so you really need to pay attention. If it can't get back above this level, what was support will turn into resistance. That's going to be a pretty big challenge. So we're giving everyone a special reminder here. Even though there was an uptick yesterday, honestly, the stock's rise wasn't anything to get excited about. And when we look at the pre-market performance in a bit, it might be an even more disappointing situation, one that really won't make anyone smile. So why am I saying this? Let's take a look. The Dow Jones dropped 1.63%. The S&P fell 1.78% and the Nasdaq dropped 2.2%. So you can probably see why I said there's nothing to smile about. And if you look at the futures, the drop was immediate, although it has stabilized a bit. But honestly, I think we should wait for the regular market to open. Once the cash market opens, if it's not going to stop there, it might keep dropping. All right, so let's talk about Europe. Not looking too good either, because the Strait of Hormuz has been blocked. Why does Europe care so much about the Strait of Hormuz? Well, actually, most of the oil from the Middle East mainly goes to, besides being exported to Asia, the majority is shipped to Europe. Geographically, it's just closer that way. So that's how it works. So you can see the EU's Euro Stoxx 50 dropped 3.5%, 3.6%. That's pretty rough. I'm just telling you, this whole thing looks like total chaos. All right, after we finish looking at commodities, we'll take a look at how individual S&P stocks are performing. Things are really bad here. You can see, actually, didn't we talk about this in the afternoon? In the afternoon, we were still around this level and hadn't surpassed Monday's high. But then, you see, just before 5 o'clock, and now it's already shot straight up. At one point, it did break through 845 with a slanted wick, that's right, but basically the highest point was also exceeded. If the closing price goes above the previous high again, you can pretty much tell that the pressure ahead will be greater. And don't underestimate it. Just because it's at 85, 85, 95, 100, hey, that's actually not far at all. What I'm trying to say is, it's really not as far off as you might think. Oil prices hitting $100 could happen in just 2 or 3 days. If things really move quickly, or if luck isn't on your side, you can see it happen just like that, so you need to pay attention, okay? But if you're looking to manage risk, oil prices aren't really a good target because they can reverse direction way too fast. Just wanted to chat with everyone about that. On the other hand, the US dollar is just too strong right now. When the dollar gets this strong, it squeezes gold, and as a result, spot gold actually drops. As for gold, well, actually, silver has dropped even more. But I want to tell everyone this is probably just a short-term phenomenon, so don't get too worried about precious metals. After all, the UK hasn't really managed things well, but as for gold, there's still relatively strong support. So with the US dollar being strong, there's some squeezing going on, but it's something to keep an eye on. Also, US Treasury yields are looking pretty strong too, and that's also on the stronger side. Now, let's take a look at a few news items. Before the market opened, I saw 2 pieces of news that I especially want to share with everyone. There's an oil storage and trading center in Jebel Ali, UAE, that caught fire. This is really unfortunate. And why is this important? Because it's one of the few facilities located outside the Persian Gulf. At this storage and trading center, in other words, operations here might have a chance to avoid being affected by a blockade of the Strait of Hormuz. But the problem is, it actually caught fire, and it was a major fire. You don't know whether it was caused by people, if it was intentional, or whether it was intentional or accidental. We just don't know, but it really did happen. All right, and then there's a pipeline here. There's a pipeline that connects to the oil fields in Abu Dhabi. But the problem is, this pipeline doesn't have enough capacity. And most importantly, not only is the pipeline capacity insufficient, but there was also a fire. So with this shortage, I don't think things will improve just because of this. Also, the Eurozone just released its CPI data yesterday and today, and it unexpectedly accelerated. That's not good either, because the year-end figure was 1.9, which is higher than the expected 1.7, and it's still below the 2% target. You have to understand that the CPI release today isn't based on surveys done today. It's usually from surveys conducted about a month ago. That actually makes the situation worse. In other words, inflation hasn't really been brought under control. Prices are already moving, and if another war breaks out, it'll just add fuel to the fire. That's a lot of pressure. Plus, we're seeing that the US PPI is actually trending upward. So we really need to be extra cautious here. The risk of inflation is extremely high. Now let's take a look at the pre-market performance. Wow, some of the bigger movers, BBY, that's Best Buy, is up because they released their earnings report. And Target should also be up for the same reason, because of their earnings report. And this one should be A7J. I think that's also because of their earnings report. Okay, and this one is financial, or I'm not too familiar with this company, so I don't have much of an impression. What I want to point out is, starting from the 4th one, EOG is in energy. FNG is also energy, C is energy, Oxy is energy, APA is energy, and CF is industrial gases. MMC, Marathon Petroleum, is energy. ConocoPhillips is also energy. EPL, which I just mentioned, natural gas, is also energy. Page SX, Phillips 66, that's also energy. C versus S, Chevron. All right, Raytheon, do they have VL energy? SOM is energy. Cox is cleaning products, which is a bit different. Then EQT is energy. ESS, SS, this one I think is real estate. Okay, let's take a look. So among the top 20 Hong Kong stocks, almost 14 of them are related to energy or defense. So what we talked about before is already coming true, right? The market is now more focused and performing in this sector. Now, on the other hand, let's look at the ones that have dropped, like Freeport. All right, so the decline might be due to the stronger US dollar. NRG actually didn't perform well. This one is energy related. Why did it drop so much? Well, it could be due to some specific news. For example, there are talks that they might issue new shares, which could dilute earnings per share for existing shareholders. So this drop is probably a reaction to that news. There's also some shifting demand, and Asindex is adjusting as well. Newmont Energy is moving into holding, and they're making adjustments too. And then this one is in the chemicals business, right? I remember looking into it before, but I forgot the details. Anyway, it's also down. STX, Seagate is also adjusting, and WBC Storage is dropping too. Did you notice that memory-related stocks, which were the strongest before, are now starting to fall as well? So everyone should pay a bit more attention. Next, we still see a lot of other things going on, and of course, the ones that are dropping the most stand out. Otherwise, the futures market wouldn't be showing such a weak performance. So, yeah. Even though our stock market performed relatively well yesterday, with a rebound or even turning positive, I want to tell you that today, the risk of war still seems to be ongoing. So today, we definitely need to take a conservative approach. Now, let's take a look at everyone's questions. All right, let's see. Okay, let's see if there's anything similar. Department stores are offering discounts on TSMC stocks, so Wenyang, you could be happy about that. But let me tell you, you need to be careful. No matter which stock you're looking at, if you want to keep buying in, you need to be more cautious. It's best to split up your funds and adjust your strategy. All right, today's drop is actually due to the war, really because of the war. And then, let's see. Okay, let me tell you about Taiwan. Right now, Taiwan's biggest problem is still the issue of natural gas reserves. If your natural gas reserves are really too low and it leads to a disruption in the supply of gas-fired electricity, that would cause a huge drop in the global stock market. You know, US tech stocks would also be hit hard because, let me tell you, a lot of people rely on TSMC to make a living. And if the market crashes like that, Trump might come and try to snatch TSMC. That would be even more ruthless. So it's best if this kind of thing doesn't happen. So as for the market plunge, this is something that really caught you off guard, huh? All right, let's not comment on Taiwan's energy situation for now. So our night market dropped 2%, right? But if you look at US and European stocks, they actually fell by more than 3%. So it's basically a pretty bad situation. So AEP is, let me check that for you again, okay? They should all be related to energy, right? Let's not wait. Let's just take a look now. American Electric Power is fine too. If I remember correctly, this company is more like that. Power generation company, and lately those have been performing really well. They've been performing really well lately, so it should be pretty good. It should fit into the power generation idea, because when it comes to power generation, besides nuclear, there's some companies like Edison, EIX, and others, because American power plants are sometimes more regional, concentrated in places like California or certain areas like the Southwest, Southeast, Midwest, and so on. They're all different, and their scales vary. Some are big, some are small. Sometimes when we're searching, we might not catch all of them, but that doesn't mean they're not good. So I just wanted to mention that to everyone. As for this part, some officials have said that there will be no power shortages in March. If that's the case, maybe they have special channels to connect the gas supply, so there won't be any shortages. Anyway, that's how it is. What I'm saying is, that's basically a black swan event. You can believe it won't happen, and I hope it doesn't happen either, because if it does, let me tell you, as long as you haven't sold all your stocks, you're going to get burned. All right? And honestly, even the US stock market or anywhere else, there's nowhere to hide. So what we're saying here is, please, everyone, pay attention. Okay, if there aren't any new questions, we'll wrap up here for today. So we'll see you tomorrow. Talk to you again then. Bye-bye.
Our company has no improper financial interests in the individual securities recommended or analyzed. The information in this program is for reference only. Investors should make independent judgments, evaluate carefully, and bear their own investment risks. If you don't want to miss the latest market updates, be sure to turn on the notification bell and hit subscribe. In addition, we have plenty of great video content on both Facebook and YouTube. Don't miss out. In our group, We share in-depth explanations of global financial events with you every day.